Hello, I'm Ron Meinert, President of the Adell Co-op. We're presenting to you the virtual annual meeting summarizing our year in 2020. We're going to do a couple things today. Jerry's going to give a financial report and a manager's report. David Miller is going to read the secretary's minutes from last year. I'm going to give a president report, and then later on Jerry will have closing comments. So here's Dave Miller with last year's secretary's report.
Adell Co-op's 102nd Annual Meeting, February 11th, 2020. Ron Meinert called the meeting to order at 1:04 p.m. Dave Miller read the minutes from the 101st Annual Meeting and were approved as read. General Manager Jerry presented the audit report. Jerry reported that sales fell from $39,646,391 in the 2018 fiscal year to $33,386,518 in the past fiscal year, and that lower commodity prices are the main reason for lower sales. When patronage refunds and taxes are taken into account, the comprehensive net savings amounted to $2,033,621 compared to $1,593,825 in 2018. And that we paid out $540,414 in member equity and $611,453 in cash patronage for a total of $1,151,867. John Fisher made a motion to approve the audit report with a second from Stan Lammers. Motion approved. Jerry continued with the manager's report, saying, all in all, it was a very strong year again for Adell Co-op. And for the weather we had, I thought it was a pretty good year. And it was the best year ever for Co-Energy Alliance. Jerry said last winter's polar vortex had something to do with higher petroleum sales. At Adell Co-op, we'll be undergoing a lot of senior leadership changes in the next few years and are preparing for that. Our agronomy manager of nearly 30 years, John, retired at the end of 2019. Mike Mulder has replaced John. Jerry thanked the entire Adell Co-op staff as well as the board. Ron Meinert gave the president's report, saying that not getting every acre planted affects the farmers and the co-op. It truly was a challenging year for everyone involved. Ron continued by saying, now on a brighter note, there was a milestone achieved at Adell Co-op this year. Manager Jerry completed his 35th year of dedicated service to Adell Co-op. Ron presented Jerry with a plaque and a gift thanking him. Ron Meinert and Jason Mentink introduced themselves as candidates for the co-op board. Stan Lammers made a motion to close nominations with a second from Wayne Gearlock. Motion approved. Stan Lammers made a motion to use unanimous consent to approve the two incumbents to the Adell Co-op board. Seconded by Chuck Bourne. Motion approved. Jerry had the vendors introduce themselves while door prizes were handed out. Mark Arnson made a motion to adjourn with a second from Brody Staple. Motion approved. Time 2:12 p.m. Recorded by David Miller.
Okay, thank you, David. Now we're going to call on Jerry to do both the financial report and the manager's report.
I'm Jerry Like, General Manager of Adell Co-op. I'm pleased to report another good year for Adell Co-op for our fiscal year ended August 31st, 2020. First thing we'll go through is our balance sheet, which is a very strong balance sheet. We have working capital of over $9 million and enables us to operate without a lot of borrowed money. So I'm going to round some numbers off because we have a lot of figures here to look at. We have a comparison next to the 2020. We have 2019. I'll reference that occasionally. So we'll start with just current assets. We had cash of $3.1 million, receivables of $2.4 million, inventories of just under $6 million, margin account equity of $72,000, unrealized gain on forward contracts of about $49,000, supplier prepayments of $214,000, prepaid expenses of $35,000 and income taxes recoverable of $62,000 for a total current assets of $11,976,000 compared to $10.7 million in 2019. Investments and other assets, we had investment in other cooperatives. It would be primarily Coop Bank, CHS, and Land O'Lakes of $1.66 million. Our investment in Co-Energy Alliance was $519,000. Our investment in United Ethanol, $250,000. And the marketable equity securities is CHS preferred stock, $133,000. So we had total investments of $2.565 million. And then for property and equipment, we had before depreciation of just under $26 million. After depreciation, we have a net property equipment of $11,479,000. Our total assets of just over $26 million. And then we'll go to the liabilities section here on our balance sheet. So we have current liabilities, again, compared to 2019. Notes payable, that'd be a seasonal loan, $607,000. Accounts payable, $783,000. Current maturities of capital lease obligations of $22,000. Patron prepaid payments and credit balances of $492,000. Unrealized loss on forward contracts of $202,000. Accrued expenses of about $340,000. Taxes payable other than income taxes of $86,000. The patronage refunds payable in cash, which will be mailed out here at the end of February, $626,000, and another at $14,000. So total current liabilities of $3.1 million. We had long-term liabilities, capital lease obligations. That's a 2018 semi-tractor lease from Penske. It's considered a capital lease, so it's listed as a long-term liability. Long-term debt, that is our payroll protection plan loan. $397,700, and deferred income taxes of just under $1 million for $1.45 million in long-term liabilities. And then for patron equities, we have patron equities of just under $11 million, and patronage refunds payable in equity this year, $626,000, and in our unallocated reserve, $9.8 million. So total patron equities of $21.4 million. And we add the liabilities and the patron equities together, we have balances out to the assets of $26 million. And then for our operating statement, we had sales, they're up about $2.5 million, $35.9 million compared to $33.3 million. Our cost of sales of $29.1 million compared to $26.7 million. So our gross margin, that's what we pay expenses, and anything left over after expenses would be our net savings. $6,762,000, 18.84% of sales compared to $6,668,000, just under 20% of sales. So even though our sales were up $2.5 million, our gross margin was up about $97,000. Out of that, we have salaries and wages of $2 million. It's up about $175,000 from the previous year. Did add staff, and of course, we always have to compete for labor. And in Sheboygan County, labor seems to be pretty tight. So we want to remain competitive so we retain our well-qualified and dedicated workforce. Payroll taxes of $151,000, employee insurance of $190,000, pension expense, primarily profit sharing that the employees get, and 3% of their wages get put into a 401k plan. And vehicle expense of just under $400,000, very comparable to the year before. We don't spend a lot of money in advertising, just under $5,000, so we had just under $3 million in total distribution expense. The next category, general expense, was depreciation, which is quite high because we've made a tremendous investment in facilities and equipment at Adell Co-op, $1.4 million. Insurance of $214,000, property taxes of $97,000. Rent of $22,000, and that's the capital lease on the semi-tractor. Supplies and repairs are just under $500,000. That was up substantially from the previous year. Utilities $181,000 for total general of $2.4 million compared to $2.3 million. And then the provision for doubtful accounts, we have $325,000 in that provision. Last year we added $74,000 to that. This year we actually received, we had some money that we recovered that had been written off of just under $2,000. We did not add anything to that reserve. Director fees of $8,600, data processing of $18,000, professional services, which would be legal and accounting, $48,000, office supplies and expenses of $98,000, and telephone of $84.50. So total administrative expenses of $180,790. So total operating expenses were $5.577 million compared to $5.33 million. We traded some equipment off, sold some assets. We had a gain of $103,617. So total operating income of $1.288 million. And one other category is other income, other expense. Here's our interest cost. So in this category, we had significantly less interest cost this year, $39,000. Patron finance charges of $106,000. Other revenue of $63,000. Other expense of $206,000. So total expense in that category is $75,000 compared to $164,000 the prior year. That gave us net savings of $1.2 million, or 3.38% of our sales, compared to 1.172, or 3.5% of our sales last year. And here's where we record our 50% portion of the profits from Co-Energy Alliance under the gain in equity of Co-Energy. It's $422,000, and then we received $206,000 in patronage refunds from other cooperatives, so it'll give us a net savings of $1.84 million compared to $1.94 million, so we're down about $100,000. And then there's a provision for income taxes, so after the $239,000 for income taxes, we have a net savings of $1.6 million. And that concludes the financial statement. Well, that financial report can always be a little dry, a little boring, so I'd just like to do a short management report for our fiscal year 2020. And of course, it's no secret out there that it was an unusual year to say the least, and probably my biggest challenge and worry this past year was how COVID was going to impact our staff. With the quarantine rules, even if you weren't sick, it could be off up to a month as a healthy employee. And would we be able to adequately staff our business during our peak times of planting and harvest? Would we be able to service our customers? Words like mask mandate, testing, quarantine, pandemic, shutdown, COVID-19, PPP loans, stimulus checks, virtual meetings, and essential workers became part of our everyday vocabulary. Canceling our annual meeting and posting what we're doing today, some of our normal annual meeting items online, and having our election of directors by mail and ballot is another result of the 2020 events. We went from looking like this year would be a disaster, with one large customer having to dump their milk for quite a while this past spring, to our farm customers having a good year for farm income, with milk prices rallying from their lows in May, a surprising grain rally during harvest and beyond, great weather for planting and harvesting, and generous government payments. Your cooperative applied for a payroll protection loan, which we received for the amount of $397,700. We have applied for forgiveness on that loan and are waiting to hear back from the Small Business Administration. As far as our departments go, our agronomy division, since we had fairly good planting weather this past year, with the exception of one heavy rainfall in May, we had a great year in 2020 with record sales. Total sales for the department were $10.8 million, an increase of over $2 million. We sold over 17,000 tons of fertilizer compared to 14,000 tons in 2019, an increase of 23%. Seed sales of $1.8 million were up 55%. Crop protection sales of $2.1 million were up 31%. Our custom application sales of $735,000 were up 18%. It was, as Dave had mentioned in the reading of the minutes, we saw a major leadership transition with the retirement of John Sudbrink, who had been our agronomy division manager for the past 30 years. Mike Mulder was hired to replace him, has done an outstanding job, along with his staff, Roger Lucky, Eric Ernessy, and many others on the agronomy team. So had great cooperation there. Many feed mill employees helped out during the spring push. A lot of part-time people, a couple of interns that we had hired to get the job done. Our feed mill had sales of 11 million, up 475,000. Our feed tons were down 2%, but we had an increase of over 200,000 in grinding sales. We were very competitive on our fine ground corn price and picked up corn sales to several large dairy operations. We had some transition in our feed sales and nutritionist staff, with Ashley Menmacher leaving for a career change. Aaron Racky and Sarah Schulk came on as feed sales nutritionists in May and June of this past year. We are grateful to our Hubbard feed reps training our sales staff and being available as a resource to answer questions, look over rations, and farm call with Aaron and Sarah. Our feed business serves all size customers, from backyard laying hens to large dairy operations. We still bag a lot of custom feed mixes, making it a labor-intensive business. Our grain elevator, remember we're going back, basically 2 harvests here. 2019, very challenging year with the wet weather that we had all fall. It was a harvest that none of our customers want to ever experience again. The majority of the harvested beans had to be dried. The corn was poor quality with low test weights, and moistures were high. With the amount of prevent plant acres in 2019, our grain volumes were down, but we ended up taking a fair amount of grain, having extra corn on hand at the beginning of the 2020 harvest. We moved these extra bushels because they were of such poor quality to ethanol, so they didn't end up in your feed rations this year. Our sales of 14 million in grain were on par with the prior year. Co-Energy Alliance had another good year, contributing $422,000 to our net savings. We continue to invest in the co-op. We had capital expenditures of $866,000 this past fiscal year. Part of that, we added 3 new Wilson grain hopper trailers, purchased a new airflow fertilizer spreading machine, replaced our fertilizer loader, replaced a few pickup trucks, and replaced our truck scale. We paid out $712,266 in patron equities and $631,000 in cash patronage this past year, for a total cash back to our members of $1,343,000. These figures include patronage and equity paid out to the Co-Energy Alliance customers also. Just in closing here, I want to thank you, our members, for doing business with your cooperative this past year. I want to thank our dedicated workforce. We work long hours, 7 days a week, just as you do during planting and harvest, and it's our business to serve you and make sure that you can get your crops planted and harvested. And that takes quite a commitment from our employees, and if they're married, understanding spouses and their children. So just want to say thanks again to our dedicated workforce. At times they amaze me at how committed they are to serving you. Looking forward, we already have 5 months in our fiscal year 21. We are off to a great start in agronomy for this fiscal year with record fall fertilizer sales. We're hoping that this will take some of the pressure off of us in the coming spring with spreading and delivering fertilizer. We've replaced a Patriot sprayer, added a second post-emergence dry spreading machine. We're have added a fertilizer control and electrical building to our dry fertilizer plant, and are replacing our dry blending system this fiscal year. We had a good fall harvest volume, but sometimes what's good for our customers might not be good for the co-op. In this case, our drying and storage revenues will be down significantly from this last year. And because of the shorter or smaller than expected corn and soybean crop in the U.S., there's no carry in the grain market, which basically means that the futures months going forward are not higher than the present. So there's really no way for us to roll our hedges forward and pick up some extra grain margin there. So, and what's good for our cash grain customers, or anybody that has grain to sell, it may not be so good for our feed customers with higher cost of feed, putting financial pressure on dairy and livestock profitability. We've already seen a lot of volatility in milk prices, which look like they'll be lower than what we saw in 2020. On August 1st of this year, I'll have been general manager at the Adell Cooperative for 37 years. It's been a privilege to serve as your general manager. Sometimes I've often wondered what I got myself into, but it's been quite a ride for me. I've had to put a lot of thought into this, but I have given our board of directors notice that I do plan on retiring from the co-op as general manager at the end of this year, 2021. An executive search firm has been retained to assist your board of directors in finding my replacement. I'm sure I'll miss the daily interaction with my coworkers and our customers, but it's been quite a ride. Thank you.
Thank you, Jerry. Okay, President's report. Going to be some duplication from what Jerry had said, but that means we're all on the same page. So, welcome to the Adell Co-op annual virtual meeting. Adell was blessed with another good year. Just like on your farm, when the weather cooperates and you can grow crops in a timely fashion, it becomes easier to be profitable. Same holds true for Adell Co-op. Timely planted crops that are taken care of timely creates great sales in the agronomy department, creates great feed, which helps the feed mill, and in the fall helps the grain department become very successful also. When this falls into place, it allows the management and the board at Adell to maintain and upgrade equipment and facilities. This year we upgraded the fleet with several sales vehicles, several trucks. We upgraded the scale, currently upgrading the fertilizer blending area, along with upgrades to the shop, just to name a few things that are going on at Adell. This past year we also had personnel transitions, especially with John Sudbrake retiring from agronomy and Mike Mulder taking the lead in that department. There was also new personnel added to sales in both agronomy and in the mill area. One of the challenges the board will be facing in 2021 will be hiring a new manager, as Jerry has given notice that he would like to retire later this fall or early this winter. The board has started the search process and hopes we can hire a new manager sometime this fall. On behalf of the board, I would like to thank Jerry for his many accomplishments over his tenure. With his leadership, Adell has become a state-of-the-art facility that has grown to meet the needs of both the employees and the customers of Adell Co-op. I feel he should be proud of his significant accomplishments, as it will serve the Adell customer base very well into the future. I'd like to take time to thank the workers at Adell and get the tasks at hand accomplished, the people in leadership roles that help the general manager that oversee the operation, and the board of directors for giving their opinions and setting direction for the co-op, and the members who do their business to keep Adell Co-op successful. Let's hope and pray that as the year goes on, we can see this pandemic move on, and that we may be blessed with a successful year in 2021, both for Adell Co-op and for you on your farm. Thank you, Ron Meinert. At this time, we're going to call Jerry to come back up and just give some closing comments on the meeting today.
We will be mailing ballots out in early February. We have two things on the ballot. One is to increase the compensation for the board of directors. That will be explained in that letter. Then also we have three openings on the board of directors. The three incumbents will be running again. They are Jeremy Jensema, Nick Kleiber, and Jay Wimler. And also Glenn Schneider has agreed to run for director too. So again, that will be coming out shortly here in early February. Thank you.